Known as the only four-time world trading champion 2008, 2009, 2010, and 2012, Andrea Unger is a full-time professional trader since 2001 and honorary member of SIAT, Italian Society of Technical Analysis, a branch of IFTA. Appreciated author, he is often invited as a speaker throughout Europe, America, and Asia. About Andrea Unger: 3 reasons you should not be here.
Hi, I'm Andrea Unger. I always love the About Me page on websites like this because they're written in the third person even, though they're typically written by the owner of the site. So after Andrea Unger made several attempts to sound smarter than he really is by writing about himself in the third person, he quickly abandoned that approach and decided to write this page like it was a letter to a friend. Which in many ways, it is. Anyway, what do you want to know? I was born in 1966. I live in a small town near Ascoli Piceno, Italy with my wife, Nadia, and 4 kids. I'm guessing that's not the kind of stuff you're looking for. You're probably wondering, is this guy worth my time and attention? For many readers, my answer is no. Here's why. 1. I cannot help you get rich quick. For some reason, people equate trading online to get rich quick. I get it. That's what attracted me to trading in 2001, more on that later. I thought it would be easy money and I'd have thousands coming in every day on autopilot. Well, it wasn't easy money. I do have consistent revenue coming in every day often on autopilot, but it took lots of work, frustration, and perseverance to get there. And it still takes work to keep it all running. So if you're not prepared to commit to roughly 10 times more effort than you're expecting, I'm not your guy. 2. If you don't want to invest, you're not going to enjoy my stuff. No, I don't sell black box expert advisors. But here's why I'm telling you this. Start going down the trading rabbit hole and you'll see all kinds of ads and articles about free accounts, how to get rich easily with Forex and binary options, and all kinds of hype on the latest loopholes for gaming the system. Does some of it work? Probably. Surely there are professional signal vendors. But if you rely on that, you don't have a trading business. You have an income stream that's supported by an unsustainable gimmick. And that is a waste of time. If you want to waste time, go see a movie. It's more fun. 3. If you're looking for the easy way, I don't want to help you. It's important you understand what I'm telling you. I can help you, I just want. I'm capable of it, but I refuse to do it. Why? Because when I hear someone say, what's the easiest way, what I'm really hearing is, I'm not fully invested in the long-term success of my own trading business and am therefore not fully invested in my long-term success. And that really translates to I don't want to work. Look, trading is hard work. Yes, when it's all up and running, it can be just like you imagined. Passive revenue and money while you sleep. But that takes hard work to create and it takes hard work to maintain. You're still here? Good. Here's what you can expect from me. Tools, methods and tactics you can use to start entering the systematic trading world or to consolidate your existing position in it for free, which are usually followed by blatant sales pitches. Can you believe I just told you flat out that you're going to receive blatant sales pitches from me? Well, why wouldn't I tell you? I mean, come on, this website is about what people call a trading guru. Info products are there to be sold. I will try to sell you something and I won't be subtle about it. However, it's always preceded by really valuable material you can use immediately. That's free. The idea is you'll say, man, this free stuff really works. I think I'll try the paid stuff. Pretty simple, right? I call it the old demonstrate you can help them by actually helping them trick. Works like a charm. But you still might be wondering, here's my first sales pitch to you. Go to my homepage and read some of the articles on my site. If you like them, sign up for some of my free trainings. If they help you, consider buying my stuff when I make you an offer. Pretty simple, right? Thanks for reading this page and get to work. Andrea Unger.
I found a way to the LA. I fucked the money. I found the light. I said I found a way.
Mr. Andrea Unger, the four times champion of Robbins trading competition. So hello, Andrea. Nice to see you here on the interview.
Hi, Stan. Hi, everybody, and thanks for inviting me.
Yeah, some of them think that you're like a Rocky Balboa, for them like a champion, 4 times a champion. 2008, 2009, 2010. So did your trading change over the years? So if yes, how exactly?
The approach, no, it didn't change. The strategies, yes, they did. I've been an automated trader, and obviously back in 2008 and 2009, I was simply running strategies on an old version of TradeStation and then getting the orders on the order tracker and placing orders manually on the platform. Starting in 2010, it was possible to send the orders directly from my platform, which at that time was Ninja Trader.
Okay.
And today I trade completely automatically. So my platform is running. Today I use multi-charts. It's running on a cloud server, and things are going on its own. So obviously technology evolved, but also strategies, because there has been a lot of changes, in my opinion, in the markets, in the way the markets move in this year. Also consider, for example, 2008, 2009, many commodities were at their very start in electronic trading.
Yeah.
And there was a deep change in those markets going on in the coming years. Imagine gold, silver, crude oil, the grains, all these were like children back in 2008 and 2009. It was a completely different world. Today, they are getting to their maturity, they are getting more efficient. So also the way to trade them changed, because some simple setups which worked in the past no longer work. At least they don't produce the profits you could expect. And you have to adapt your style to change the strategies accordingly and so on. So there's always a lot to do.
Okay, so
I was born as a momentum trader, a breakout to the end of the day, or maybe overnight, depending on the markets. Today, I have a mix of everything, because it's a question of surviving. I mean, if you trade the classical breakouts, opening range breakout things or so, it's really hard to get them produce profits. You probably lose your money. So you have to understand which markets still respond well to breakouts, which market got to an efficiency level so that breakout trading is absolutely not good. And you have to create also the proper mix. Obviously, you have to consider also other factors. What time of day does the breakout work best? What time of day is it better to consider an entry to revert an existing trend and so on? All these answers come from investigation in the market, testing. And that's what I do. I keep on testing and trying to understand what the results of my tests are telling me, or better, what the market is suggesting me to do through my tests. Obviously, I'm not always smart enough to properly read all the answers. That's why I also lose money in the markets from time to time. It's normal. But we have always to stay tuned as much as possible to stay up to date on what the markets are doing.
I got it right, said I found a way to that lake. Fuck the
The mini S&P 500 is probably the most efficient market out there. If you trade breakouts there, you get lost. For a very long trend, you can do whatever you want. But if you trade on a hit and run thing, or even intraday, you have to trade on a mean reversion model on the mini S&P 500. While on crude oil, for example, you still can get some good profits if you trade on breakout, provided you do it in a clever way, because things do no longer work as simple as they did in the older years.
Yeah, exactly. I admit that breakouts are not working.
The real question is, will the breakout lead to a trend or not? Because if it does not lead to a trend, it doesn't matter if you enter before a breakout, after, on a pullback, because simply it will not go in the direction you imagine. If you understand this, which is obviously not a unique answer, there are many aspects and many shadows, as always in the market. But at least you know what way to trade should be the best to give you a comfortable expectation. You have to trade something that you expect to work properly for a decent period of time at least. Say all, but most of the tradable markets out there, where tradable means markets with enough volumes to make sure you don't stay there in the middle of nowhere when you want to enter or exit the market. So I trade all the major index futures in the US and in Europe. I also started trading some futures, index futures in Asia, because I think they are still very interesting also in respect of breakout trading. There are still some inefficiencies there which help in this direction.
Okay.
And I trade most of the commodities, all those with volumes. So I don't trade orange juice, for example, even though it's getting a bit more interesting. So maybe
it's a mess, I would say.
candidates for the next 10 years. Yeah. And I trade currency futures. I don't trade Forex directly, just because I'm happy with the futures we have. I don't need.
It's the same chart after all. It's the same chart.
Trade Euro Japanese yen, you have to create some mix up. But if you are happy with Euro, US dollar, British pound, Japanese yen, Australian dollar, New Zealandese dollar, I mean, you have a lot of them, so you can actually. I ran an analysis last night, as I do usually, and I got 32 markets.
32 markets.
List. Yes, I'm saying this because this analysis also sums up all the strategies on a specific market to give you the result of a combined strategy on that market. So from this, I can understand if my strategies are overall bad in a specific market, which is telling me that market is probably changing its characteristics compared to what it was showing when I developed the strategies. Because if one strategy goes bad, okay, that model is no longer working or something, or it was a bad model. But if all the different strategies on one market go nuts, then I can understand that that market probably changed its behavior.
Yeah. Yeah.
And so looking at the combined result on a specific market, I tend to evaluate what to do on that market. And the list was 32 markets.
32 markets.
All futures, yeah, all futures and nothing else. I don't have stocks.
Many masterpieces of art history have long lived outside the public view, either buried in the depths of basements of museums or tucked away in villas of the rich. However, unknown to most, the largest art collection in the world is currently collecting dust in a Geneva free port, a fenced-off warehouse near Geneva Airport, beyond the view of the public, and outside the reach of law enforcement agencies and tax authorities. Most people are unaware of how vital of a role free ports play in the global network of high-end art transactions. We do not even have a ballpark estimate of the value of goods stored in luxury free ports due to the laws protecting their secrecy. In 2016, Deloitte estimated that $1.6 trillion of high net worth individual wealth was allocated to art, and by 2026, they project that number to almost double. Contrary to what most people think, the high-end art world is not filled with patient art aficionados willing to drop tens of millions of dollars in the name of art. It's a world filled with mostly savvy investors, business people, and the moneyed elite. If you're fascinated with the different types of tax loopholes individuals and companies are able to get away with, look no further. The high-end art market is an ideal playing ground for tax dodging, offshore banking, and even money laundering. If you want to stay engaged with this channel, please take a moment to like and subscribe. Thanks so much. Luxury art is useful for all matter of financial maneuvering, but one of the biggest reasons the wealthy elite of the world love it so much is because it's a very cost-dense physical asset. Think about all the things you can buy for $100 million. You can get a private jet, a yacht, or maybe even some pricey real estate. But these objects are huge. They have a massive physical presence, so if you want to stash your wealth discreetly, a 200-foot mega yacht is not the most low-key approach. And running costs and depreciation make it a pretty bad investment anyways. Artwork is small, easy to store, holds its value, and can be worth an insane amount of money. In 19th century Switzerland, an innovation emerged that would eventually serve the art industry very effectively. And today, as a result, there are free ports, extremely secure storage facilities offshore where valuable commodities can be kept with the utmost discretion and no one can enter without an appointment. As the economies around the world became substantially more connected when the internet emerged in the late 20th century, tax loopholes and secrecy domains acquired a much greater significance in the global economy. And for art, the free port became the physical equivalent of a Swiss bank account. These international free trade zones and tax-free storage facilities around the globe, which the world's biggest exists in Switzerland, Luxembourg, and Singapore, are usually exempt from tariffs, value-added tax, capital gains tax, or other charges that could be levied on the owner of the art. And if that art is held through an anonymously owned offshore company, then it is also very likely that the artwork will be outside of the scope of wealth taxes and other rules on inheritance, because its ownership is simply not declared. Let's look at a comparison. When you sell your home, the paperwork details of the sale of that asset are all available to the public, including your name and the previous owners. But when someone sells an artwork at a free port or even an auction, no matter how big the purchase is, the identity is typically concealed. So the paperwork might identify the work coming from a European collection, but the buyer usually has no clue with whom he or she is dealing with. Sometimes, surprisingly, even the auction house may not know who the seller is. So in brief, you have a market connected by a large network of luxury free ports with a liquidity pool in the multi-trillions of dollars, protected by secrecy and designated by governments around the world as a tax shelter. And to top it off, external and international watchdogs do not regulate the art market as they do with financial markets. Works of art are really tough to value financially. They do not have a fixed value as currency does, and its value can be purely subjective. As a result, the price of art can be inflated legitimately or through other means such as conspiracy among bidders at an auction. So here's where the art of tax scheming in the art world becomes very interesting. Collectors can receive tax benefits by donating pieces from their collection to museums, acting as a tax credit system, offsetting the tax payable by the taxpayer. This is where buying low and donating high is really beneficial, since the charitable deduction would take the current value of the work into account, not the amount the collector originally paid for it. So, if you have a big tax bill coming up, and most billionaires do, you could, in theory, buy a large collection of art from a no-name artist at a really low price. Drum up some interest in this artist by locating and paying a reputable art dealer to campaign for this new artist. They will in turn pitch this artist to exquisite magazines how this new artist is changing the landscape of modern art. Once this artist has received some notoriety by the press, bring a few pieces of art from your new collection to an auction house for sale. Now here's where the fun begins. Once the art is up for sale at the auction, you will call in a few fake bids to artificially inflate the price of the art because, well, that's legal in this world. Now you've effectively sold the art back to yourself. And you might be wondering, what has this done for me outside of losing a 2% commission to the auction house? And well, you shouldn't be feeling buyer's remorse because now your artworks on paper are worth a substantial amount of money, raising the net value of your art collection significantly. And the value on this paper is legitimized by historical sales figures at the auction where you bid up the price yourself. In reality, the new value of this artwork would be a tough sell to other collectors, so you aren't really getting any richer. But what you can do is donate a few pieces of your art collection to a museum as a charitable donation. This means you will be able to report a large donation to the IRS by just giving away paintings that originally were worth close to nothing. And with any luck, the museum might name a wing after you. In the end, outside of Uncle Sam, this is a win-win all around. A win for you because you save an incredible amount in taxes, a win for the artist because they have new notoriety in the art world, a win for the art dealer because they get to charge you for their services, a win for the auction house who get to charge you a percentage commission of the sale, and a win for the museum because they receive free art. Looking from the outside in, all of the key actors are incentivized to play along in this positive feedback loop because, well, they're better off doing so. And there's nothing inherently illegal with what they're doing. Art is weird. It's difficult to understand the hidden meaning behind it, but it's more difficult to understand their markets and crazy high prices. So why on earth would billionaires stash a significant portion of their net worth in art? Artwork is rare, people expect it to keep appreciating in value, it's discreet, and you can pull off financially funny business with it. Artwork is just another tool billionaires use for the accumulation of wealth and distribution of capital worldwide, an effort to ensure their money is working for them and not for some government somewhere.